Welcome to Morphic Labs, and today we are going to be discussing market depth based aggregation. But before we get into that, do me a favor, hit the subscribe button if you want to keep up with more content like this. I would greatly appreciate it. And if you're interested in increasing your market intelligence, which if you're interested in understanding how markets work at a deep level, you should be interested in increasing your market intelligence. But hey, you am I to say what it meant. But if you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow and microstructure aggregation, event-driven and hybrid methods aggregation, plus implementation and selection criteria. If you're interested, the link's in the description. You just gotta sign up to be a free member and you'll have it all to yourself. Now, let's get into 7.4 market depth based bars. Now, what is a market depth based bar? Market depth based bars aggregate based on the total quantity available in the order book, capturing the liquidity landscape rather than just traded volume. Here's the formal description. These bars close when the cumulative market depth sum of all visible orders reaches a target threshold. The formulas are market depth defined as D sub T equals the sum of Q sub T to the bit of I plus the sum of Q sub T to the ask of I, where I indexes from 1 up until N, where Q sub T to the bit of I equals the bid quantity at level I, and Q sub T to the ask of I equals ask quantity at level I, N equals the number of levels considered. Depth weighted price, I'm not going to get into this because depth weighted price and price are just the same thing. You just weight the price with the depth, but I'm not going to get into this, and it's also not in my computational functions definition, so it's irrelevant for now at least. And the bar close condition is defined as the sum of D sub T has to be greater than or equal to D sub target. Now let's get into the use cases. When do you use this type of aggregation? Liquidity analysis and monitoring, large order execution planning, market resilience assessment, depth-based signal generation, cross-venue liquidity comparison. Now, what are the advantages of this type of aggregation? Captures available liquidity, forward-looking measure, useful for execution planning, reflects market resilience, less affected by trade timing. What are the disadvantages of this type of aggregation? Requires full order book data. Hidden orders not captured. Spoofing can distort depth. Depth varies significantly by venue and computationally intensive. Now let's get into the code on the left right here. And just to walk you through what we're working with here, I have Ethereum's L2 order book data, and I have Ethereum's price data, right? As you can see over here with the price side, the size, the time, this is clearly high frequency data if you pay attention to the details, but trade ID, and at the bottom we have L2 data. Most of these columns are not covered, but here's the order ask, price ask, the size, the level it's at or in the order book, and we have the order ID, and we have the price ask, the size of the ask, and essentially at the bottom we have tick, which is going to be our data structure that's going to be taking some important variables from these data sets. And essentially we'll be looking at price, we'll be looking at the bid size, we're looking at the ask size, we'll be looking at the bid price, and we'll be looking at the ask price, right? And essentially we'll be looking at the first 200 entries of that, right? So we're just going to take this tick. Let me run it again just to make sure. We're just going to take this tick, and our target threshold, our default target threshold is going to be 0.01. But obviously the function does this behind the scenes automatically. So let me just run this. And as you can see, over the 200 total ticks that we processed, only 198 actually met this condition, right? Now let's go look at that. As you can see, at the bottom we have our tick index, and on our y-axis we have the sum of D sub T, right? The sum of the market depth, and over here we have price of Ethereum. And as you can see, the little red dots represent a bar close condition being triggered, right? Now, let's play around with this target a little bit more, right? Instead of using a target value of 0.01, which obviously are only 2 bars out of 200 didn't process that, because I mean 0.01 is very small. So the number of bars bound to hit that is inevitably the majority of the tick processing. But I'm going to push this to say 0.5 and just see how many bars get triggered and how many ticks get left that are not triggered, right? Now, as you can see, a final summary says that we have 176 bars that met this condition, right? And we have over 200 of the processed ones. Now, let's go look at that with a target value of 0.5, right? As you can see, here's the geometry, right? Now, what I'm going to do is I'm going to essentially push this a little bit higher, so 5.5. And as you can see, only 101 bars over 200 total ticks met this condition, right? Now let's go look at those. As you can see, the number of bar closes triggered is much smaller, right? Now, what I'm going to do is I want to push this further and see what's the magic number, so to speak, up until I can make the number of bars that meet the condition just 1 bar, right? Now let's see. Let's go to 300. 300, about 7 bars that met our condition over 200. Let's go look at that. And as you can see, here is the geometry, right? 1 bar got triggered about the close to the 50th index, maybe the 51st, 55th index. And another trigger was right in between 50 and 100, so maybe the 80th index, right? But you don't really have to guess because the code already tells you, right? First bar was at 52, second bar was at 90, third bar was at 114, fourth bar was at 134. These are indexes, by the way. Fifth bar was at 148, sixth bar was at 172, and the seventh bar was at 188, right? Now let's keep pushing because my goal is to get it to 1. So I'm going to go 500, 4 bars processed in total. Okay, let me go a little bit further. I'm going to say 800. About 3 bars over 200 total. Let's go look at that. And here it is, right? And let's look at where these bars essentially got closed. Bar 1 closed at tick with the 109th tick, right? And bar 2 got closed at 145th tick, right? And bar 3 got closed at 188th tick, right? And as you can see, the market depth is fairly similar across all closes, right? Now, what I'm going to do is I'm going to keep pushing this until I get 1. I think, 2 bars, come on. Magic numbers gotta be 1,000. This dice isn't giving me what I want. Okay, let's look. Okay, 1,200 is the magic number. And the final summary says we have 1 bar over 200 total ticks, and that bar closed at the 130th index. Let's go look at that. And here it is. We have 1 long bar, right, with a market depth that surpasses 1.2 or is equal to 1.2. But in this case, it clearly passes, right? Now, let's increase the number of entries that we have, right? So from 200, I'm going to push it to 1,000, which is the limits of the price date. Obviously, the order book data goes further than that, but the data that I have that I got from Coinbase has limits, so I can look at the full depth of the order book. But I think I could get to the 1,000th depth. Okay. Now let's push this into our function with our default target, of course. and we'll play around with it as we continue incrementally. Now, out of 1,000 total ticks, only 907 are actually meeting this condition where D sub target is equal to 0.01. Now, let's go look at that. As you can see, we have a lot of closes. I mean, it's 907 or whatever, 900 and something closes, right? Now, what I'm going to do is I'm going to play around with this target. Now, I'm going to push it from 0.01 to 0.5. And now we have 512 bars, nearly half, right, of the total ticks processed that actually meet this condition, right? Now, let's go look at that. Let's go look at that geometry. And as you can see, we have less bars being distributed, right? In my opinion, this is not financial advice, but if I were to build a strategy around this, I would essentially not pick my target threshold at a whim, right? This value, I wouldn't just pick it randomly. What I would do is I would essentially use a percentile-based parameter selection or an event-based parameter selection or a volatility-adjusted parameter selection. So this section of my market microstructure course essentially is the secret sauce to picking the right parameters or thresholds for your aggregation, especially if you want to use the aggregation on your back tests or in actual trading and putting your money on the risk. The parameter selection section is the secret sauce, right? It's essentially the nail in the coffin to all these aggregation methods, because what's the use of all these aggregation methods if you can't pick the parameter with rigor, right? Because at that point you're just guessing, right? You're just picking random numbers and hoping that the market reacts to it. But we're professionals, we do not do that. We use rigor, right? And also, just to promote the market microstructure course, if you're interested in increasing your market intelligence, go get that. This market microstructure and trading systems course will change your view on how markets work. If you don't already know how they work, it will expose you to the actual technical details of how markets work at a very deep level. But I'm not here to rant about the market microstructure course. I'm here to rant about market depth. Now, we had 512 bars, nearly half of the total processed ticks that met our condition. And I said that essentially, if I were building a strategy around this, I would pick my threshold using my parameter selection secret sauce, right? Now, let me play around with this target, right? Instead of 0.5, let me go 2.5, right? And now we have 344 bars that met this condition over 1,000 total processed bars, right? Now, if you look at the code, not the code, but you look at the geometry, as you can see, we have much less distribution, right? Now, what I'm going to do is I want to push this up until where I can get just one bar, right? 54 bars over 1,000 total processed ticks. Let's go look at that. Interesting, very interesting. Especially this long one. I mean, this one in between, I think this was at around maybe the 480. Let me just go look, because this specific one has a huge market depth, right? You can see that it's towering over all the other little ones, right? And it was just about here, right? And what I want to do is I want to see where exactly it closed. The numbers is close to 500. It's close to 500. So I'm probably say 400 and either 489 or 484, somewhere around there. That's where that long bar was closed. Now let me keep pushing this, right? Let me keep pushing this, because my goal is to get 32 bars over 1,000 total ticks. My goal is to get to one tick, right? As you can see, we have much less distribution, right? Now let's keep pushing this. Let's keep pushing this. I'm gonna go 400. What's the lucky number? Come on, 18. Okay. As you can see, much less distribution, right? I'm gonna just try keep pushing it. Go 700. 12 bars over 1,000 total ticks, right? The bar space is just getting smaller and smaller. Now, I'm gonna go 1,008 bars. Oof. Okay. I'm gonna just push it 1.2. 1.4. 2,000. There's no way. Come on. 2,200. 2,500. Okay, 3,000. 3,200. Still 3,500. Okay, 4,000. So, okay, that magic number is not as small as I thought it'd be. Okay, 6,000. There's no okay, 6,000. So the magic number to get 1 bar for these 1,000 ticks that got processed is a target value of 1,000, right? And it got closed at 474th tick or index, right? And here it is. But that's about it for today. If you're interested in increasing your market intelligence, I have a free market microstructure and trading systems course that will walk you through the foundations of market structure, the mechanics of trading, market data, and analytics. Plus, I have a free advanced market aggregation course that will walk you through advanced price-based aggregation, volatility-driven aggregation, information theoretic aggregation, order flow microstructure aggregation, event-driven and hybrid methods aggregation, implementation, and selection criteria. If you're interested, the links in the description. Just gotta sign up to be a free member, and you will have both of them to yourself. And that's about it for today. If you're interested in more content like this, hit the subscribe button. I would greatly appreciate it. And I am out. Bye.